I hope you can hear me. Live recording. I just got home. I didn't even realize market was opening. Market's open. Here we go. We've already marked out our session high, session low. Wait, no. These are session lows. This is hourly low and session low, right? Let's go on the hourly. Hourly. Okay, do we see anything crazy? Right? Marked out here. Session lows around here. Here, right? We got all this. Why are there so many on my screen? Oh, because these are the session highs and lows. Okay, back to the 15 minute. The 1 minute, sorry. London session open. Asian session high, liquidity here, right? Just mark that out, low here, low here. I think this is session low and hourly low, hourly low. Mark that out just in case something happens over there. Market open. Let's look for a manipulation of a low or a high here. I'm not quite seeing. So what do we need to do? Wait for a manipulation of some sort. Because this is fucking going sideways, right? This whole shit's going sideways. This is not an uptrend. I mean, it is, but, you know, we have an inverse fair value gap right here. Price wants to continue higher. Makes a high and a high. Makes a low and a lower low. So it's just spreading right now. This looks like a prime time consolidation. Let's see if price wants to drop below and hit a key level. That's what it looks like it's doing right now. There's a lot of sell pressure here off these doginators. That's going red. Nope, green. Okay. So what do we do? If price hits our key level, right? Let's call it this low, right? Price breaks below the low. Then we wait for an inverse fair value gap or a break of structure. Okay, that's the order flow. The order flow right now, I honestly can't tell. It looks like sideways. It looks like. Let's get on the 5 minute. It literally looks like. Let's get on like the hourly or the. Do we have any sort of structure breakage? A high, high. I'm just making higher highs here. No, we're just things are we're making higher highs as of right now. 5 minute, 1 minute. Okay. So be we can also trade New York session after this. All right, so we can sit here and wait the whole time. Draws and liquidity here and here. Those are your main ones. So its price is going to get hit. 5 minute time frame. Wait for a confirmation confluence, inverse fair value gap, or break a structure. Right. Confirm that price has broken order flow, has broken structure. It is now reversing. Right. Then wait for a continuation confluence, fair value gap, or an equilibrium. Okay. Go to the 1 minute. Another confirmation confluence, break a structure, inverse fair value gap, 79% extension if we fucking have to. Then we enter the trade. So the 1 minute break a structure, inverse fair value gap, that's for when price comes down to fill a fair value gap or hits equilibrium. So like, let's say this turns into a downtrend, right? So let's say it turns into a downtrend, hits this liquidity, right? Comes down, comes down, comes down, comes down, hits this liquidity, right? We see a break of structure, maybe like right here. Okay, if there's like a high here, price comes up, right? And then this would be, let's just say this is your order block, right? Price comes down, price forms a fair value gap right here, comes down, hits the fair value gap, boom, then comes back up. Or we could wait for an equilibrium within the order block. Price comes down, hits just below in the discount, boom, goes up. That's what we wait for after we hit a key level. Okay. That's what we're looking for here. Or we could possibly even do remove. We could do ESCAN on the 15 minute, right? We'll count 6 candles. Count market open. So 1, 2, 3, 4, 5, 6. Let's see if this strategy works. This RP strategy. Hello, freaks in the party. So price breaks out to the upside. It makes a session high and or in your session low. Market opens at 6. right here. This is market open, right? These are your lows. These are highs. This could, I mean, this could even be like, maybe there's an S&P divergence in here. Let's check. Don't use the 1 minute. What's happening? Okay, we're good. Let's get on like, do I have a 10 minute? I do have a 10 minute. All right, let's look here. We see a high and then a higher high made right here at 0.20 and at 150. Let's go to NQ. At 0.20 and at 150. High, then a higher high. Okay, so that's normal. What's our daily bias? Who's blowing my shit up? Yeah, yes. Okay, this strategy, would this work? Price breaks out to the upside and the downside. That's a little bit confusing. So I'm not sure what I want to do with that. Okay, on market open, what do we see? Price is just going sideways, all right? Fair value gap disrespected. High, higher high, lower high, lower high, lower high. We also see a low, higher low, lower low, 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 what? Low. This could be done. This could be. Now, should I short position target this area of liquidity? That seems like the worst idea of all time. Remove. Price looks like it wants to come down. We form a little bit of fair value up here. Okay. 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 So what else should I be doing? What else should I be waiting for? What's my daily profile? What did Asian session do? Asian session came down, manipulated this low, went to the fucking moon, right? Came up, starts chopping up, starts going sideways here. I wouldn't call this a continuation in London session. I would call this might have to be manipulation reversal. I wouldn't call this an uptrend unless we get on like a higher time frame. Whoa, I have all these things now. That's sick. Party. Got a big party. Price. So with this strategy, we're waiting for price to break out to one side. It's called the break and retest. Break out to one side, come back down, hit right at the equilibrium, and then go back up. However, that would only really work if we knew the daily bias was bullish or bearish, or if we knew it was going to be a continuation, right? It looks like we're starting this downtrend. Okay, low here, down up, low, low. Let's go on the 5 minute. Right, it's the price is coming down. Price is coming down. Fair value got formed right here on the 5 minute. It wants to sweep something. It wants to sweep this. I'll freeze the party. I'll freeze the party. Mommy, something, a waddy, shoddy. Freeze the party. Let's wait for price to come down here and hit this. Got all this liquidity down here. Right, and price didn't really make a huge move off of it. It's been chopping up a lot. Up downs, up downs, up downs, up downs. Is there news? Let's find out. Let's just do fucking everything. Let's get it all done. Today. There's nothing today. Nothing. Serious? Not tomorrow. Wait, no, it was yesterday. Nothing yesterday. No news day. Interesting. Tomorrow we have okay, red folder. Interesting. Oh, hitting our key level. We're hitting a fucking key level. Okay, 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 okay. Liking this. I'm liking this. Now, this isn't the session low. However, it is right. Okay, we're seeing some buyback pressure here. All the freaks in the party. Uh, uh. I want to know what it wants to hit. Should I be marking out every single like this one and this one and this? I'm gonna have these two marked out. Here we go. Here we fucking go. All right, fuck it. What we're gonna do. We're just gonna do this. Price is already going up to the moon. We're targeting this. Boom. Buy. Nope. Do not be fucking stupid. We need to wait for conferences and be confident in our trade. Right. So liquidity sweep. Possible. It's possible. Rating at key level. It's possible. We need to see a break of structure, a closure above this high, or an inverse fair value gap, or an order block. Actually, let's mark that out. The leg down. That this one swept the liquidity, right? So ideally, we want to see price come back up to fill this fair value gap. If this gets inversed, we buy. If this fair value gap gets inversed, we fucking buy this shit. Move this over here because this is the leg down. Is it the whole leg down? Is it this shit too? No, it's just this because this is the only one that broke the struct. This one swept the liquidity, right? Right off that. Yep. If we get it, if this one gets hit, it's going to go down further, and we can target 1 to 3. If price respects this fair value gap, we're targeting 1 to 3. We made it in there. If this one turns red, we might have to respect this 1 to 3. You know why? Because we got hella freaks in the party. We don't use FMTs for 1 minutes. Price came up, it's getting pushed down. Hmm. It's respecting the order flow. It's respecting this downtrend. All right, we have a couple consecutive downs here. I don't want to get too ahead of myself. However, I am inclined to put a sell here. Is that enough? Is a respected fair value gap enough to push price down? Where does it want to go? Oh shit. Possibly here on this level on 6, 7, 8, 7, 6, 7, 8, 7. Party 6, 7, 8, 7. Right? I mean, price came up into the fair value gap and then right formed here. I don't want to miss. I don't want to like miss an entry. I don't want to get scared either. Okay, if we get a triple respect out of this fair value gap, we got to go short. Made a lower high. We're in a downtrend. If we see an inverse fair value gap or a break of structure. Um, if this inverses or we see a break of structure off this, we buy target here, right? Or do we go even higher? What else is higher than this? Holy shit. Possible? It's possible. We don't even know if this is going to be a liquidity super bad. He got respected there too. All right, we're in. We're going short. This fair value, they're liking this fair value gap. They're enjoying this fair value gap. All the freaks in the party, but I'm sorry, get that I'm funny. Yeah. Now, is this just enough? Right? Because what's the next thing price wants to target? Previous area of liquidity, right? And just because we saw, I mean, it could be this one. You know, could be this one. Could be this one. Could be this one. We don't know. Is a respected fair value gap enough? A respected bearish fair value gap, is that enough to go short on in target? What the fuck was that? Yo! Lock my phone open. Lock my trade point. Off already? We're losing. We're losing. Is this? I hope this thing's right. I swear to God. I think. A triple respected fair value gap. Very interesting. Very, very interesting. Let's go to 5 minutes. Get rid of this. Whoa, whoops. All the freaks in the party. All right. Fair value gap respected. Let's bust it down. Let's bust it down. Let's bust it down. You know you want to target this. Or this. Or some other form of liquidity. Look, there's relative equal liquidity right here. Right? Low, low, double lows. Oh, there's a lot of it right here. A low here, a low here, a low here. Well, that's if it wants to target that one, that's good. Because I hit take profit here. All the freaks in the party. Oh, so we're losing. And it disrespected the fair value gap. It disrespected the fair value gap. So that was not enough. Damn it! See, this is where being patient is super important. So what do we do now? We instantly put a long. Oh my god, go, fucking go! Target this. Stop loss below here. Fucking shit. Limit order. Market. Fucking buy. Units. One. Go. Jesus Christ. No freaks in the party. So this might have been the worst idea of all time. Hella freaks in the party. So look, price then closes above this fair value gap. Right? We see it here, here, disrespected right there. Boom, come up, move. Hella freaks in the party. Hella freaks in the party. Sorry. The good thing is that we can just keep trading until we get all this money back. Don't do that. We're not going to do that. We're not even going to get close to not doing that. Right? But let's get for real. Boom. I see this fair value gap get respected once, twice, 3 times, 4 times. I'm like, okay, that's got to mean something, right? Boom, go down. Target this. No, you're an idiot. Because if we had waited literally 3 minutes, we would have seen that this fair value gap got disrespected the shit out of, and price came up. We see a break of structure where we see a high made here, and then a higher high made here, right? Boom and boom. Break of structure. Then an inverse fair value gap. Now what? Now price wants to go up. Right? Now we just wait. Now we just freaking wait. Oops. Wait, an hour? What's going on in an hour? Updates. Let's race in the party. We're supposed to be on the 5 minute. What the fuck are we doing? If we were on the 5 minute, we would have seen this. Okay, I'm glad we're doing this. If we were on the 5 minute, we would have seen this fair value. We were supposed to be on the 5 minute the whole fucking time. And I knew that. Why am I trading on the 1 minute? Why am I doing this? 5 minute, boom. We would have seen this fair value gap, boom, disrespected. TJR is just so right. He was just right the whole time. He was right. And I'm wrong, and I'm not following my trading plan, and I'm not making smart decisions, and I knew that. So why am I doing it? Why? I need to hold myself more accountable. I do. All right, so boom. So if we had not done that, let's look. We were on the 5 minute the whole time. Wait for your draw to get hit. We hit that, right? We hit that. We hit our key level. Then what do we look for? Literally in my notes, wait for confirmation confluence. Inverse fair value gap, break a structure. Inverse fair value gap right here. Boom. 5 minute time frame, wait for a confirmation confluence. A fair value gap or equilibrium. Right? Boom. Can an inverse fair value gap also be a fair value gap? Because that's what this is right here. So you buy off this candle closure. Boom. Boom, boom, boom. Okay? Then you go to the 1 minute. Now we can go to the 1 minute. If we were patient, if we were a fucking little good patient boy, which we're not, Confirmation confidence. Break structure, inverse fair value gap, 79% extension. So wait, 5 minute time frame. So look, drawn liquidity got hit. Go to the 5 minute. Confirmation compliments. We're in a downtrend. What's the confirmation that liquidity got hit? We see the inverse fair value gap. So now we're going up, right? Then go to the 5 minute time frame. Wait for a continuation confluence. A fair value gap. Boom. This is the 1 minute, but let's say we saw it here. Then go to the 1 minute and look for a confirmation, a break of structure, or an inverse fair value gap. But that would mean it's going in the opposite direction. If we have a continuation on the 5 minute, why are we going back to the 1 minute to see a break of structure or an inverse fair value gap? We don't want to break the structure on it. We've already broken structure once after we hit the liquidity. Is he saying it goes up? Right, so inverse fair value gap, boom, goes up. Continuation goes up. Then inverse fair value gap break of structure goes down. Then enter. But that doesn't make any sense. I'll have to rewatch that video. If I was just patient and confident, if I was just patient and I just stuck to the plan and stopped being fucking stupid, I could have had this one in the bag. Stop losses under or above the second high or low on the 1 minute time frame. So in our case, it's going to be above the high, or we're buying, so it's going to be below the low. The second low on the 1 minute. So it should have been, we bought right here. It should be before 1, 2, before this low, right here. Put it below this low, target this. 1 to 3 risk reward. We're targeting Asian session high. That's what we're doing. Other freaks in the party. It's not sorry. We're gonna get some more practice on New York market open too, so do not even freaking worry. Don't even fret. We're gonna try the RP method, and then we're gonna try. We're just gonna look and see what London session did, and then make a move towards. We're gonna find out our daily bias. We're gonna mark out our 4 hour highs and lows, and we're gonna do. We're gonna do it all. We're gonna do it all. I need to be on the hourly. Kind of cute here. It's on the hourly. What I like about the hourly is that it seems very simple, right? Break a structure, target this, done. Like literally, all you really need is just like, this is gonna be so wrong and so stupid. It might not be, but like, right? High, high gets pushed above. Break a structure here. Target this, boom, and that's big time money, right? Like if we did. Here. Let's freaks in the party. Happening here. Where's my? Oh, not on the right thing. I would love to close this position. Not going to do it. Not going to do it. I'm going to stick to my trade. Stick to what I know. I know that this is an inverse fair value gap. Also be its own fair value gap? That's a good question. It's a fantastic question. I'll figure it out. This video get uploaded? 7%. This is going to be a fire video. Go all in. I'm going all fucking. Let's go. Right, it goes even higher. All right, let's look. So, why did we lose? Why did we lose this sell trade? Because we didn't follow any of our fucking rules because we're being stupid. We're just being stupid. We're getting too ambitious and too excited and trading emotionally. We're not going to do that. Don't ever do that again. Right? Learn from mistakes. Never fucking let that happen again. That was just me being dumb. And I knew not to do that, and I still did it anyways. Right? What was it? It was a sell targeting this with our stop loss above this high. Insta fill. Right? We shouldn't have even been on the 1 minute at that time. We should have been on the 5 minute. Because if we had just waited, we would have seen an inverse fair value gap, which is break, which also, and then a break structure off this candle or whatever, right? And then we target this, the price goes up. We got that. We fucking got that. Yeah. So we've won our trade today. We made two trades. We lost and we won. We're down on the day. Do we continue trading in revenge trade? No. We're not going to try and get more money off this. However, because I'm still learning and I want to get as much market experience as I can, I'm going to continue trading. I'm going to continue to try and find entries, try and find liquidity sweeps, try and find confluences that are make me confident that I know where price is going to go. Look for SMT divergences, look for order blocks, look for liquidity sweeps, look for all this shit. What do you want? So bad at texting. Okay, look, so I want this to say how much money the sell 21 fill price up here filled. Let's figure this out. Well, yes, right. So yes, buy. Filled my stop loss, filled my limit order, filled my take profit. All right, so filled my limit order here. I said, look, this, yeah, 19. Sell. So my limit order got filled for the sell, for the short. Then it filled my buyback at the stop loss. If this said buy at take profit, we would have made money. But it filled the buy at the stop because I have to buy. I sold it, now I have to buy either above or below the price. So the buy got filled, but it was the stop loss buy because we're being stupid and being dumb. Then I placed the other order, I placed the buy order, the limit order for the buy filled. Then it sold it at my take profit. Sold it at take profit. It bought at my limit order. So let's look. Yeah, look. So sell. So it sold my limit order. Right, limit. Buy the limit order. Then it sold the stop loss. Why does it stop? Oh man, I can't see it. I don't know. Okay, making more sense. We're making more sense. All right, that's enough of that for now. Whoa, 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 whoa. Just identifying liquidity on the 4 hour on NASDAQ. Have a low here. Let's take a look. Low, high, low, high. What's price doing? If price pushes below this low, which it did right here, you can expect this is like sort of relative equal liquidity. You can expect it to fill a massive buy order and go up. So that's what I'm expecting right now. Right around here. Sometimes it's going to go up. And it goes down. Okay. Well, seeking out liquidity. Where is it looking? Lows down here. This low, the 18,300. See if price hits the 18,300. Price hits 18,300, then it's going to go up. Then sweep this low. Trend with these highs. With these highs. Structure going up. Hit this high, comes down. Oops. Alright, sweeps this high, then comes down, targets this. Oh, it doesn't, it stops right here. And for now, like this could be a possible liquidity sweep if it hits this key level. Hit this high right here. Swept. Break a structure here, target this, boom, that's one. Three. Pushes below these lows, sweeps, target this one actually. Dude. Nope. 18.3. Okay, hit it. Whoa, 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 whoa. Okay, we gotta break a structure. Structure here. Stop loss below the lows, target this. Relative equal liquidity here, push below this, sweep upwards. Hit a little bit. Come back down. Yep, hits it right here. Sweep upwards. What's the target? Maybe this, maybe this. It's getting closer. Boom, closes below all these lows, sweeps upwards. Okay, need to be closer on this. The high, breaks the high, comes down. Nope. Breaks the high again. Break structure here, then we go down. Go down. Nope. As soon as I say it, it goes back up. Here it's gonna be break a block. Yeah. I'm just wrong every time. Low this low. Sure. Actually, inverse fair value gap of the break structure. Price pushes below these lows. Inverse fair value gap. Go up. Look at this. Look at this. Value gap. Price comes down. Here's these lows. Sure. Is above a high. Boom. Scale down. Find conferences in here. High gets put high right here. Just above. Scale down. Find confluences. Break a structure here. Target this. Boom. Low gets pushed below. Break a structure here. Target this. Boom. Fat fair value gap. Price pushes into it. Buying pressure out of it. Target this. Boom. That's a liquidity here. Here. High gets pushed above. Still going up. Low. Breaks below it. Buying pressure out. There's a lot of buying pressure here. Maybe wait. That's fine. A lot of buying pressure out. Here. Low. Below this low. Fair value gap. Selling pressure out of it. Just to fill the imbalance. You could just see this, you just put it in the middle. Fair value gap. Break structure targeted. Price hits it. Selling pressure out. Doji, doji, doji. Pushes below these lows. Pushes below this low right here. Sweep. Target this. Target this. This swept all this liquidity. Fair value gap. Right. Swept it by scale down lift accomplices. Down, yes. Target push above. Target the fair value gap. All these highs. This one. The highest high. Tiny little fair value gap. Price comes down. Break a structure here. Buy. Target right here. Hits. Fair value gap. Hits. Price pushes below these lows. Sweeps upwards. Target fair value gap. Pushes above the high. Down. Target the fair value gap. It's another one right here. Hits. Just below this low, sweeps up, target here, boom. It was the imbalance though. Low, low, push below it. Price gets low, comes up, targets. Sweep that. Break the structure. Fair value gap. Manipulation. Uh, this is a reversal. So we must have a manipulation somewhere. 3. Didn't really do anything with this. We pushed past Asian session highs. Booty sweep down. Right. And then what's this? Consolidation or something? New York session. So manipulation into it must be a reversal, I guess. Because this is this is New York market open. Yeah. Right. So uptrend, right? Uptrend, uptrend. Uh-oh, break of structure. This is your breaker, 5-minute breaker block from the high to the low. Failed order. Retracement followed by a break of structure. So low, close below. This is the retracement, right? An uptrend, this trace down. Okay. Price comes up. So this is the direction we want to see price come up, hit the equilibrium, then continue, or we want to see buy or selling pressure out of this breaker block. Go to the 1 minute. I'm hoping to see like sort of inverse fair value gap off to this. Something. Right, we have a low here. If price comes below this low, that might be a good entry. But I'm hoping we just see an inverse fair value gap like right now. So that would be sick. I also need to close below this thingy on my fair value gap. Seeing some pretty decent sell pressure. About to break through. There it is. Break through. This candle closes below. We're getting our sell position ready. Because 2.5. Target this fair value gap probably. Risk like units. Is that a doji? What the hell? Nothing there. Oh, awesome. So see, I got a little too I got a little too hasty. We want prices to come back into this equilibrium zone to catch it here to then go short. However, my thing got canceled. Rejected? Why did he get rejected? I would want to do. There it is. There we go. There we go. Let's just run it. There it goes. I don't know why I got rejected before. Hello? There we go. Good sell pressure out of it. Now, is this an inverse fair value gap? We have a green candle closure with no, like. Oh, it was targeting this fair value gap. Shit. Seeking internal liquidity. Fill it. Well, I hope this one gets inversed. Have I learned nothing? Should I have been more patient? It's not exactly what I want. I'm kind of forcing my confidence onto this market right now. Price might hit this equilibrium and then come down. Fair value gap here got filled. Seeing some buys out of it. Really should have waited for a closure below that fair value gap. That's your equilibrium. Blue line is the equilibrium. Stop loss is above what kind of this high? Because I bought it. This candle right here, I put it above this high. Just sitting here waiting. Guess I'll just update if I take it or not, or if I get tickets or not. The hell happened to my freaking hair? Alright, internal, external liquidity. Fair value gap, fills, seeks a high, a hair, boom. Right. Fair value gap, right here, filled, seeks next high, boom. Fair value gap here. This one doesn't quite get filled by anything. This one got disrespected, now it should go up. Alright, look at this. Value gap, filled, seek liquidity, boom. Internal liquidity, external liquidity, highs, lows, external, imbalances, internal, 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 right? Right, fills this, seeks out, we're in, it looks like a little bit of, fills, yeah, because this is a bearish fair value gap, so fills it, seeks out liquidity here, boom, right? Price comes here, fills, seeks liquidity, it gets it, but it also comes way down here. Liquidity sweep, exactly. All right, look at this. Price pushes below these lows, boom. Sweep break structure, target this, target 103. What about this? Holy shit. Fat imbalance filled, doesn't seek liquidity, continues higher. All right, imbalance filled, seeks external liquidity. We don't see that here. Just don't see that here. This is very easy to spot while in a trend. Here we go, right here. Right in a trend. Bullish for value gap, filled, seek liquidity, high, right here. Bullish for value gap, filled, seek a high, here. Bullish for value gap, filled, right? Filling the internal liquidity, now seek external liquidity, high, filled. Fair value gap here. Oh, also, this is what you learn. Price balances out a fair value gap and above. It has no reason. So, like for this example right here, we see two fucking things, two fair value gaps. One here. What the fuck? Oh my god. Okay. Fair value gap here. Fair value gap here. Right. Price comes down, fills this fair value gap. It's not gonna come down to fill this one. This price action has already been balanced. So this fair value gap now means nothing. Get rid of it. We don't even care. Price comes down in this range again, fill even more orders, then goes up. Right? That was another thing that's important to know. Even if you see multiple fair value gaps, as long as price balances out the most recent one, it acts like a shield. This is now like a shield. Right? This low is like a shield. And price will likely not reverse to fill other imbalances before the one that just got filled, before this one, right? But if price broke below, like say there was like gaps in between this, like there was like fair value gap, and like price came up, like chopped up in here, and then made another one even higher. If this one gets filled, its price isn't has no reason to come back down to fill this one unless you see like a fat liquidity sweep or something. But even still, if you saw this, right, fair value gap, double fair value gap, this one gets filled, seeks out higher liquidity, right? Right here, this high, target that, boom. Let's do some bearish ones. Here we go. Here we go. Here we go. Here we go. Right. So look, this is going to be difficult to do, but double, even, well, this one doesn't count because it's on. It's difficult to do. Look, fair value gap here, fair value gap here. Price doesn't even quite fill that one. Yeah, it does. Fills, seeks out price, fill the imbalance, continue the trend. Boom. Seeks out liquidity, right? Target this low. Or no, yeah, this low. Right. You got it. We got it. Good. What else we got? Fair gap right here. Price fills, seeks out external liquidity. This is difficult to get because price comes up so high. Fair value gap. Filled, seek out previous low. Boom. External liquidity here. Right? We can draw this out. Right? So these are external liquidity, right? And then let's say we have some fair value gaps. We have fair value gaps within this range, right? Price is going to seek out, this is the internal liquidity. Internal. Fair value gaps within the trend are internal, outside of the trend, highs and lows are external, right? So see a high formed, low, fair value gaps on here. Price comes down, fills this fair value gap. Now it has no reason to come all the way the fuck down here to fill this one. It's already balanced out price action within this range. Right, so now price has been filled, seek external highs right here, price hits it. That's exactly what I'm showing you. Same with bearish shit, right? All right, let's say we have in here, external liquidity on the highs and the lows, right? Price here, boom, fair value up here, price comes up, fills it, seeks out external liquidity right here, boom, hits. It's just exactly what it is, right? Imbalance, filled, seek a high here. Imbalance, filled, seek a low. Don't quite get that one. It's all right. Imbalance, filled, seek a low right here. Boom. Price fills internal to seek external. Imbalance filled continues higher. Wasn't right on that one. Imbalance filled, seek a low. Doesn't get that one either. Imbalance filled, seek a high. Boom. We're already. Let's get on NASDAQ. Do this over here. That's all this shit is on 4 hour. Especially when we're in a trend, like right here. Perfect example. Fair value gap filled, seek this high, right? Up, down, boom. Gets hit. What about this one? Fair value gap. It's a lot easier on the bullish ones. Fair value gap, boom, inverse fair value gap. Creates a low lower than this one. You can expect price to come down. No, it doesn't, but it does, you know. Difficult one to say. Difficult one to say. Clear sweep down here, price comes up. Right? What about this? Comes a low, price comes below that, breaks up. Fair value gap, price comes in, target high, boom. Fair value gap, price comes into target it, seek a high, maybe this one. Uh-oh, we hit that shit. Look at, ooh, do we see something crazy here? Okay, look. Yeah, look. Fair value gap here. Value gap here. Fair value gap here. That one's hard to tell. Here we go. Perfect example. Here. Price comes in to fill this fair value gap, right? Boom. Filled. Seek previous highs. External liquidity. High right here. Target it. Boom. We get that shit hit. So we're not going to like see this one get filled and then be like, and then see like a break of structure or something like right in here and expect all of this shit to get filled. Just don't expect these ones. Like once we balance price action up here, there's no reason for it to come down here. There just isn't. Price action filled. This one got filled a couple times. Look, you can even fill it. Look at this one. Fair value up here, filled. Boom. Price comes up here. You buy it at the fill, at the closure. Buy here. That's, you know, $400, $200, whatever in your trade. Fair value gap, filled, seek highs, boom. Difficult to say with this low way down here. Fair value gap, filled, seek a high, boom. Fair value gap, filled, seek a high, boom. That's what it does, especially in a trend. Right here. Fair value gap gets filled here. It's kind of far. So this might even be a liquidity sweep. Right? It's got all these highs. All of these, this whole trend, every single little retracement down has potential to be a liquidity sweep. Right? We're pushing past all these highs, right? We see a break of structure here. Off this low, off this candle, right? We see this fair value gap. Wait, we see this fair value gap just get straight up disrespected. You could just maybe buy here. Do we see that anywhere else? What about this fair value gap here? I mean, this one, say this one, close, look at this one, perfect. Fair value gap, imbalance filled right here, seek this high. Boom. We're in an uptrend. You can even put a little bit higher. But that's just how it works.